the debasement of the currencies will continue because the countries will print even more money, and therefore gold and silver relatively will go up in price, although investors might not have, or individuals might not have as much money as they have now. But still, remember, there's only 0.5% of world financial assets in gold. So there'll be a lot more people buying gold. So that will support gold and silver for many years to come, in my view, because it'll be this shift from other asset classes to the precious metals.
Gold never moves in a straight line. It has a rhythm, an explosive run, a pause to consolidate, and then another surge that carries it higher. Egon von Greyerz, founder of Gold Switzerland, believes we're on the edge of the next acceleration. His view is that gold and silver are poised for a significant advance before autumn, not based on guesswork from price charts, but because the underlying forces are already in motion. The bigger picture is what matters. Currencies everywhere are eroding. As central banks print and governments borrow, the value of paper money continues to decline. Gold itself doesn't change, but the number of fiat units required to buy it inevitably rises. That's the core of Egon's argument. The higher gold goes, the more it reflects the weakness of money, not any change in the metal. Institutions have barely begun to adapt. Only about 0.5% of global financial assets sit in gold. If pensions and significant funds ever shift toward a 5 to 10% allocation, the supply side will not be able to meet demand. Prices will be forced higher. ETFs tell a similar story. Despite steady gains in gold, allocations remain cautious, though U.S. funds are beginning to show signs of life, adding exposure as a hedge against fiscal strain and monetary missteps. Egon also points to gold's track record. Over the last 25 years, it has outperformed nearly every primary asset class. The only notable exception is Bitcoin, but he draws a clear distinction between the two. Bitcoin, in his words, is speculation. Gold is wealth preservation, anchored in centuries of history and now proving itself once again as a vehicle for real, lasting growth. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
It's so interesting, this difference between East and West.
It is, isn't it?
And the mentality of the people. Of course, in the West, it's all debt-based, and both for governments and for people, consumers. And consumers in the West, they don't just buy for the money they earn. They just increase their credit continuously also.
Yeah.
In the East, India, China, a lot of the Thailand, Vietnam, and all of these countries, people are savers. And the Chinese save a lot of their money. And many of them buy gold because there's a tradition and they understand the value of gold. Like the Indians have done for millennia. And so therefore, it's a mentality. And I think, yes, China will continue its investment demand of gold, definitely. Now, will there be economic swings that make the Chinese consumer less wealthy? Will they have a lower income? Of course, if, we don't know what the effect of this these ridiculous Trump tariffs. I'm totally against tariffs and the trade war that we're having now. The prosperity in the world depends very much on the free world trade. The Roman Empire, they dominated, the Romans, a lot of countries in the world, Europe, North Africa, Asia, etc. The strength of that era was that there was total free trade between these countries. Not tariffs of 10%, 50%, 100%, 200%, up and down every day. Like now, luckily they couldn't communicate that fast in those days anyway, even if the Roman Emperor had demanded it. So, this is just ridiculous, the short-term trader mentality. So it is possible that the Chinese, like the rest of the world, their standard of living will come down. But even with then, as I said, the debasement of the currencies will continue because the countries will print even more money, and therefore gold and silver relatively will go up in price, although investors might not have, or individuals might not have as much money as they have now. But still, remember, there's only 0.5% of world financial assets in gold. So there'll be a lot more people buying gold. So that will support gold and silver for many years to come, in my view, because it'll be this shift from other asset classes to the precious metals. We call gold nature's money. It's the only money that nature has created, and silver to some extent. And therefore, it's the only money that has lasted. All man-made money has gone to zero without fail. So just think about that. So when people who think that crypto or Bitcoin is going to take over the monetary world, as you rightly said, let's wait 5,000 years and see where Bitcoin is then.
Yeah, exactly.
And that's why, of course, you and we have advised investors. We've done it for now 25 years to buy gold, keep it safely, either in, if they have small amounts themselves, or otherwise with people like yourselves or ourselves in safe vaults around the world. And that it is the best form of wealth preservation you can have. And actually one of the few forms also, because, the property values will collapse, in my view, in real terms. Stock value is the same. Bond value is the same. I mean, a lot of bonds will become worthless because there'll be massive defaults. So, and the banking system will not survive in its present form. It's very clear too. So where can you safely put your money? Well, you can put it in land. Well, if you already own land free and clear, that's fine. That's very good. It's always been good throughout history. But if you buy land today, the prices are very high, and it is not, at these prices in the Western world, it's not wealth preservation to buy land today. Same with property. Properties are extremely overvalued. So there are, and then you have the other, they said that wealthy people have 1/3 gold, 1/3 art, and 1/3 land. And that's over time has been fantastic combination for preserving wealth. Today, they're actually all bubble assets, except for the gold, because gold is just reflecting the destruction of money. And sometimes it moves a bit higher than that, but over time, that's what it does. But art, I think, which is the other one, which has been a good method to preserve wealth. You talk about real art. I think that also, because all the money in the world and a lot of rich people, art is now also overvalued. So I wouldn't buy art today either for wealth preservation, because the wealthy people are also going to get poorer. When stock markets come down by 75 to 95%, bond markets likewise, and property market maybe 50 to 75%. If not more, then, that is not wealth preservation. And therefore, the only thing you have left then is gold and some silver. And I think that is a way that if people have any savings, whether it's only a few $100s, you can buy silver, or if you have thousands or millions, you buy primarily gold and some silver. But if people, we've seen a rise since we entered the market for ourselves and our investors almost 25 years ago. We've seen a rise of 11, 12, 13 times, depending on the currency. This is Western currencies. And I think that's just the beginning. And again, I'm not looking at, any investor in gold or silver will have proper wealth appreciation in coming years. But you're buying it not primarily for wealth enhancement, but you're buying it for wealth preservation. So you actually, with these two factors, enhancement and wealth preservation, is just the most superb investment as wealth as insurance in coming years, in our view. So it doesn't matter if you can't afford big amounts. Just buy a little bit of silver, buy a little bit of gold if you can afford it, and put it away. That's what's going to help you when the real problems come. If people in Venezuela had done that, for example, 25 years ago, that would have been a real lifesaver and insurance for them. But most people didn't, of course.
Debt defines the West. Savings define the East. That contrast is more than cultural, it's reshaping the future of money. Egon von Greyerz argues that while Western economies operate on borrowing, governments accumulating deficits, households maxing out their credit, and consumers living beyond their means, the East plays a different game. In China, especially, saving remains second nature. Unlike in the West, where savings are often parked in paper assets, a significant share of Chinese wealth is invested in physical gold. That mentality is colliding with a historic moment in the gold market. Central banks, led by China, Turkey, India, and Russia, are hoarding bullion at a record pace. The second quarter of 2025 marked an all-time high in accumulation, pushing global central bank holdings above 36,000 tons. It's not just a symbolic figure. It's a signal that the world is slowly but decisively diversifying away from the dollar. For China, the story runs deeper. Trade tensions, tariffs, or slower growth may weigh on consumers at times, but Egon's point is clear. The cultural instinct to store value in gold won't fade. In the West, people rely on credit to paper over weakness. In the East, wealth is rooted in savings and tangible assets, with gold at its core. Central banks are now following the same playbook. The result is a monetary shift that doesn't just hedge against inflation, it rebalances global power toward those who see gold not as speculation, but as the ultimate store of value. Let's get back to the interview.
I'm not a gold or silver bull at all. Well, I just study history and try to extrapolate it to the future. And I see what's happening around the world. I see, the base for gold and silver, or the reason for gold and silver going up is not war or some catastrophe somewhere. That pushes it maybe temporarily up, but then the long-term factor that determines the value of the metals is the deterioration or the debasement of the fiat money of paper currencies. And it's very simple that now, many years ago, I also used to forecast price of gold, silver, and I can sometimes mention a price, but I've decided as a rule that it's totally meaningless to forecast price when you measure it in fiat currencies that are being devalued by the day. So if you say that gold is going to go to 10,000, what's the dollar worth at that time? What's the euro worth at that time? And that's really what is the important thing. So I think I'm more interested now, and also getting older and wiser, hopefully wiser also, older definitely. So what I am more interested in risk and direction of markets now than actually forecasting price. I mean, I see, if you look at a chart from 1971 to today, you had a big rise for 9 years to 1980. Then you had a 20 years sideways to down move from 1980 to 2000. And now you're getting a strong move again, and it's accelerating. So, and gold moves in these phases, if you want. But now we're in the acceleration phase. And we're now, it's not quite exponential growth, but almost, because for the simple reason that the money supply and debt are growing exponentially also. So I'm quite clear that, although now we've had a sideways period of a few months again, and it moves, as I said, in phases. It moves, takes a break, moves again. I also see that gold sometime and silver between now and early autumn going to have another big move. As I said, I don't forecast price anymore. I call that a mug's game because I've been a mug also, so I don't. I try to avoid it now by just saying my very firm forecast is that over the next X years, and that's not going to be that long, but the gold is going to reach multiples of today's price. But as I said, that is just measured in fiat money. It does mean that the acceleration of the debasement of the currencies down, that's what's going to determine the gold price primarily. And then, of course, you have the very interesting supply and demand situation, because now you have all the gold was produced every year, 3,500 tons, say, is being absorbed in normal markets year after year. There are no major stocks anywhere of gold lying around, but it's all being bought. Half of it roughly for jewelry, and then, part of it for investment and part of it for a little bit of industrial, very little, and then central banks. But the central banks are the interesting part of this, as we know, because since Russia's assets were confiscated by the US, we have a situation where central banks are not going to trust having their reserves in US dollars. So that we're already seeing, it's not new, it's happening, that we're seeing a shift from dollar reserves to gold. And that shift is going to take place over the next few years. They're not rushing in, the Western central banks or the BRICS central banks, or the Western are not buying at all as usual. They will eventually, maybe if they can afford it. They probably can't afford it because they're just interested more in issuing debt than buying gold to cover the deficits. But the BRICS central banks are buying a lot of gold, and that will continue for many years to come, in my view. So there'll be a continuous strong demand of gold from big investors, being central banks. They're not rushing in, as I said, because they don't want to push the price up, so they're going to do it slowly and systematically. And of course, then, because they're buying, institutions will follow also them, and they always follow, as they never lead as institutions, pension funds, etc. So there'll be institutional buying will also become much stronger. And today is only 0.5% of world financial assets in gold. 0.5% of world financial assets are in gold, which is absolutely ridiculous. And of course, gold couldn't take 10 or 20% of world financial assets now. One thing is, of course, the value of financial assets will go down with all the falls that I've been talking about, of asset classes coming down. But the only way that this increase in demand, and that will be followed by retail investors and everybody else, the only way that this can be satisfied, this increase in demand for gold and silver, will of course be by a higher price, not by more gold and silver being produced. That's a just simple supply and demand equation.
Yeah.
This is not talking about, being a bull, a gold bull, or super gold bull, etc. It's just looking at A, the economic situation, B, the shift of investments from other assets by central bank, especially by the dollar assets, into gold. So we know that's going to come. It's an absolute certainty. And therefore, the gold price is going to be supported for many years to come. And not just supported, but it will be, as the increased demand will create a higher price measured in fiat money. And probably also there'll be wealth enhancement on top of that. Gold will not just go up by purchasing power percentages, but actually in real terms also. So it's going to be, as we said, it's so easy. It's a wealth preservation asset and also one of the best assets for wealth enhancement, which it has already been in the last 25 years. Remember, gold has outperformed every asset class except for Bitcoin, which it's a special case. I don't call Bitcoin a speculation in my view. Good luck to the ones who are in it. I think Bitcoin will fall when the Nasdaq falls because they seem to go hand in hand, and I think Bitcoin will come down. But it's irrelevant for me. I'm not interested in it, so I'm staying out of it.
Across history, every monetary era has ended the same way. Too much debt, too little trust, and a scramble into assets that can't be manufactured at will. What we're watching now looks like the early stage of that same cycle playing out again. Western economies continue to rely on credit as a crutch, while large parts of the East quietly build strength by anchoring their wealth in tangible assets. The surge in central bank buying shows this isn't a fringe move, it's becoming policy at the highest level. That divergence is significant because it indicates a structural shift in the balance of financial power. Gold's role isn't just about hedging inflation anymore, it's about defining which economies will stand firm when currencies and markets wobble. Could the gap between a debt-driven West and a savings-focused East eventually rewrite the rules of global finance? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.